All right. Well, hello, everybody, and welcome to today's presentation, Critical Illness Insurance, the Missing Piece. I'm your host, Seth Groff, and I am joined today by Chief Underwriter at IDU, Lily Hinn. Lily, welcome.
Thank you.
Just back from London, meeting with our partners. What's a good word? A lot of excitement around this new critical illness product, I hear.
Yes, absolutely. Everybody wants it, but only a few of us have it. And luckily, we're the only ones that have it.
Well, I'm definitely excited to talk about it today. And I know that when you think about IDU, you probably think about specialty disability insurance, whether it's impaired risk, whether it's excess products, whether it's an occupation where the domestic carriers won't cover. So you have to go to the Lloyd's market. And we're still doing all of that, and we're doing a lot of it, but we are excited to have this new executive critical illness product that is issued on a guaranteed standard issue basis. And when I am very passionate about critical illness, when I first got into the insurance industry, it was actually I purchased an individual CI product on myself. It was before I purchased an individual life. It was before I purchased individual DI. And at the time, for me, it was the product that made the most sense because I was single. I didn't have a family. I did have some group DI, so I hadn't purchased that buy up, with an individual policy yet. And it's a policy that I actually still own today, and I'm very passionate about critical illness. And some of my other roles, I've sold a lot of critical illness, so excited to have this. But also, we've all seen firsthand, we've seen the financial impact that a heart attack, cancer, or stroke can have on an individual. And, I'm excited that the benefit that this policy can be. And third, hopefully, when you walk away from this presentation, you will have that's A&D mindset. And so it's not disability or critical illness. In my opinion, it's disability insurance and critical illness. And we'll kind of talk about how the two complement each other throughout this presentation. So, kind of what we're going to cover today, I'll talk about, how critical illness came to be, what it is, why clients might need it. We'll go through the details of the new GSI critical illness product that is available today. We'll also talk about IDU's excess GSI DI product and how the two products fit. And then, finally, I'll kind of wrap it up with a case study and just show you how critical illness and DI can make the perfect match for your clients. I always tell people it goes together like a bush light and a boat. If you're not from the Midwest, that analogy probably doesn't hit home. But here in Nebraska, that's how we like to do it. So the first thing I want to talk about is how did critical illness insurance come to be? Because this really helps an individual understand why they might need it. And kind of the godfather of critical illness is an individual named Dr. Marius Bernard. And Dr. Bernard and his brother Christian Bernard did the first heart transplant in South Africa in 1967. And what Dr. Marius Bernard realized after doing this successful heart transplant is that technology was going to get better, techniques were going to get better, just overall modern health science is going to get better. And so as a civilization we were going to progress, and for conditions that once killed us like a bad heart, clients were or individuals were going to be able to survive those conditions. But what Dr. Marius Bernard also realized is that survival has a cost. And that cost is the financial stress associated with these conditions. And he saw that, missing work and having to adjust a lifestyle and just not having the resources that the individual had before the heart transplant had a negative impact on their recovery. And so Dr. Marius Bernard went to an insurance company and he designed the critical illness plan and launched the first CI plan. And at the end of the day, what he realized was that survival has a cost, which is a great thing, but critical illness insurance helps remove some of that financial stress associated with surviving these conditions. So, what is critical illness insurance? At a high level, I always tell people it pays a lump sum upon diagnosis of a covered condition. Lily will go through all the covered conditions, but think heart attack, cancer, stroke. Those are kind of the big three that everyone relates to. And, raise your hand if you know what life insurance does. And I'm just joking. I can't see if you're raising your hand or not. But, life insurance, somebody buys $1 million life insurance policy and they die, their beneficiary will receive $1 million, right? Pretty simple. Critical illness is very similar in the way the product is designed, but you don't have to die to receive it. And so if you have $1 million critical illness policy, which this plan we're talking about today actually goes up to 2 million of coverage. But let's say you have $1 million CI policy and you're diagnosed with cancer, you would receive the benefit. And the unique thing, or not unique thing, but the interesting thing about a critical illness policy is that the individual, when they receive that lump sum of cash, they can do whatever they want with it. If they have to pay for medical bills, they can do it. If they want some sort of treatment that's not covered by their health insurance, they can do it. If they want to take that money and go to Vegas, they can do that as well. I don't recommend it, but the money is goes to the insured, and the insured gets to decide what to do with it. And so that's all it is that, life insurance, you have to die to receive the benefit. Critical illness, you just have to be diagnosed with the condition, and then you will receive the appropriate benefit based on the policy. And, why is CI important? For this question, I always go back to the four questions that I learned when I first got into the industry, pushing on 20 years now. But the first one is, who do you know? Right? Who do you know that's been diagnosed with a heart attack, cancer, and stroke? And the power of this question is that the person you are asking immediately goes to the person closest to them. So in my mind, I know my dad had a heart attack. My grandpa died of cancer, and I believe both of my grandmas both had bypass surgery. So, like, those are the first four people that come to mind when I think of critical illness. And so it makes it real personal because everyone on this call probably knows somebody that has been diagnosed with cancer or had some sort of heart disease. And the second question after who do you know is, was it expected? Okay. These conditions, they don't discriminate, right? You can be 40 years old, best shape of your life, and one day you might, something goes wrong, you go get checked out, and now all of a sudden you have cancer. A good family friend of mine, his name was Keith. He died, I think, pancreatic cancer, but was diagnosed and fought for a long time. So it doesn't necessarily, it might be the healthiest person, it might be the most unhealthy person, but it's never expected when you're hit with this. The third question is, was there lifestyle or was there a financial impact? And the answer is almost always yes. Even if they have a good job and they have good health insurance, there's a lot of indirect costs that people don't think about, whether it's, travel to a facility, or to see the best doctor, or some treatment that's not covered by health insurance. And so there's always is that financial stress, and also maybe missing work, right? And not missing work long enough to trigger the elimination period on a disability product. So it creates financial stress. And then the final question is, would a check for $500,000 made an impact? And the question is always yes. I've sold a lot of critical illness in my lifetime, from the carrier side of things, and I can tell you that a check has never been returned. And so it does create financial stress diagnosed with this. And what I always tell people is that someday I pray that there is a pill that when you're diagnosed with cancer, you take the pill and it's cured, right? With medical science, hopefully we get there someday. But until that point, having a little bit of cash on hand and having the flexibility that cash provides, just helps that individual when they're going through a very difficult time, and their family while they're going through a very difficult time. So, we'll talk about attachment, but I want to kind of hit on what are the common uses for critical illness insurance, and then I want to talk about, why these are still going to be the same for a high net worth individual, but kind of share some things about some different things for that to talk about with a high net worth individual. Again, I came from a company where we sold a lot of critical illness in conjunction with the ACA plans. And the way that it was sold was that, hey, you got a $10,000 deductible. If you're diagnosed with cancer, chances are you're going to hit that deductible. You got to be aware of double jeopardy, meaning that if you start treatment in November, you're going to max out that deductible before, the end of December, and then you're going to be hit with it again January 1st. And so, recommend 20,000 of critical illness. So I come from a world of selling a lot of small critical illness policies, which are important, but some of the needs of high net worth individuals are going to be different. We're going to talk about those on the next slide. But the common uses, medical out-of-pocket costs, pretty straightforward there. Income replacement, again, this is not replacing disability insurance. It's just, if you don't hit your elimination period, that DI plan might not kick in. And you see a lot of people, especially with cancer, still working part-time, while they go through chemo and things of that nature. So, but we'll talk about how they kind of coordinate together. Obviously, mortgage rent. The last thing you want to do is have to be looking for a smaller place while you're going through one of these conditions. Your everyday bills, travel and lodging. Again, if you're here in Nebraska, a lot of people go up to the Cancer Center up in Minnesota, and you're not up there for a night, you're up there for a week, right? And you got a hotel, and you got the travel costs, and you're eating out, and all that adds up. Caregiving expenses, that might be for the individual as they recover. That might also be for the children. If you have young children and you need somebody to watch them while the spouse is taking care of the other spouse. That cash there is going to help. And then, recovery and rehabilitation. I know my uncle had a stroke. He was, I believe, just shy of 50, but he was pretty much, confined to a wheelchair from that point on. Very serious stroke. And, they had to put a new ramp into the house and adjust the living spaces, the shower, and all that. So, that's also going to be costs. So these are going to be the common costs. But let's look at the high net worth individual, and really, what I think it boils down to is I think it boils down to do you want the best possible care at diagnosis, right? It's like having the ability to pay for concierge. Services that help you navigate the medical system, having that private room at the hospital that your insurance might not cover. If there's some treatment that's cutting edge that hasn't been approved by the insurance company, or if they're not paying for one reason or the other, having that cash available helps. Now you're saying, well, a high net worth individual, they have the assets, right? But it might not be the best time to cash out those assets, and so you want to prevent having to sell investments at the wrong time. You want to prevent having to change your investment strategy, right? Instead of going, hey, we got to get to the bare bones here because we're gonna have some financial stress. It's like, hey, well, I have this lump sum. This will make me through for a little while, so we don't have to change our investment strategies. Maybe fund a temporary lifestyle, right? After my uncle had that stroke, he lived for quite a while afterwards, and but their lifestyle definitely changed because of just having to take care of him, and the loss of income there. Also, if there business partners, and having one person not being able to contribute to the business during recovery, it helps having that cash available as well. But at the end of the day, if there is one word that I would use, it's liquidity. And it's not that they don't have the assets to do all these things. It's just, do they have the assets readily available, or would it be nice to just have the cash upon diagnosis where they can use it as they see fit? So that's kind of how I play into the hearts of the higher net worth people. They're not going to really get that excited about having a $10,000 check to pay their deductible, right? They're going to be able to write that check out of their bank account. But having $1 million, that they can use as they want. That really relates to the high net worth individuals. So, with that, Lily, why don't you share some of the key features of the critical illness product that we have available through via the Lloyd's of London?
Yes, thank you, Seth. Yep, so you can see here what the plan design is. So we can consider this on a guaranteed standard issue basis. So GSI starting at five eligible lives. We can look at and quote employer paid and then employer paid plus a voluntary buy on top of it, even if you only have five eligible lives. The benefits, as Seth had indicated earlier, it's up to $2 million of lump sum benefit for a covered illness. The 2 million is dependent upon your income. And as I stated earlier in the first bullet, it's GSI coverage. So there are no medical exams at all. The individual just has to be actively at work. And this product is available in both the US and in Canada. And the insured can also purchase coverage for their spouse and or children as well. So it kind of mirrors what's available in the domestic world as far as critical illness. Should the individual leave the employer, they can also take this coverage with them as long as they continue to make premium payments. And again, as Seth had indicated, people can purchase this in addition to the DI coverage. So it's not one or the other, because this one, the critical illness does not have an elimination period. Coverage is triggered once a diagnosis of a covered condition is made. And that can be well before the 90-day or 180-day elimination period. And then we have customized enrollment as well. For employer paid plans, it's just a master application and a census enrollment. And then for any voluntary plans, we have customized enrollment platforms that we are able to use. Can you go to the next slide, Seth?
Yeah, so just real quick so that we're kind of clear here. So started at five lives. So let's say we have, well, I don't spoiler alert, but let's say we have a private equity firm with five people. If it's we could do that group on an employer paid basis, so they would say, hey, we're going to buy this on X amount on these five employees. And then the employee would have the option to buy up from there. So you can do a combo, right, of the employer paid and employee paid, assuming their income justifies it. Correct?
Yes. Oh, sorry. I didn't realize there was a question. Yes, that is correct.
Yeah. And then if I had a group like that, what information would I need to provide to get a quote?
Yeah, so for just a preliminary quote, it would be a census with each individual's title, their date of birth, and then their income as well. So we can determine what they're eligible for based on their income.
Okay. Awesome. Awesome. So now, or go ahead.
Yeah, so the list here is a listing of the common medical conditions that are usually covered by critical illness plans. So this mirrors the domestic coverage and what is eligible, what is available as well.
Yeah, and I think this is a pretty standard list from the critical illness plans that I see. Again, it's good to have this in the conversation, but it would talk in those top three, the questions, who do you know has been diagnosed with heart attack, cancer, stroke? Those are kind of the three that are on most people's mind, but it's always good to share the entire list so they know, what would trigger a claim. So, Lily, I know you're going to walk through the GSI disability insurance. But before we get into the details, I just want to do a quick high level to make sure everybody kind of understands where a Lloyd's of London GSI product fits. So, if you're looking at somebody, I'm just going to use like $100,000 a month income. So you have a high net worth individual, they make $100,000 a month. Maybe they have let's say a $10,000 group policy, right? So they have a group policy, which is $10,000. And then let's say that somebody goes in there and writes an individual policy on top of that, that maybe is like 20,000. So that gets them up to 30,000 of coverage, but most domestic carriers, have a cap at either 30,000 or 35,000 participation limit on the IDI. So let's just, for easy math, say that they get another 20,000. So now they have 30,000 of benefit, but remember they have $100,000 a month income. We would sit on top of that from a Lloyd's perspective. And we write this both on an individual basis on a GSI, but like a hypothetical in that situation, I think we could probably get them another 35,000 a month of coverage. So we're getting them to 60 or 65% or 60 to 65,000 of benefit for their $100 a month income. So that's kind of how the excess DI works and how our excess GSI works. But anyways, Lily, go ahead and kind of mention the details of the plan.
Sure, thank you. Yep, and for the disability insurance plan for employer paid plans, we can go down to a minimum of 3 lives. And depending on the circumstances, we've also been able to go down to a 1 life employer paid scenario as well. That's when, like, your president or CEO, your top executive at the company, it has a gap in coverage, but everyone else is covered by the underlying LTD and underlying IDI coverage. For voluntary, it's a minimum of 25 lives, but there's flexibility there. We're willing to go a little bit lower for the right risk profile. This is a own occupation definition for the full policy, for the full benefit for the duration of the policy. Coverage is also fully portable, whether it's employer paid or voluntary, if they leave the company, as long as the insured continues to pay the premium. There's a variety of products that we can offer from a disability perspective. It can be personal income, key person coverage, buy-sell coverage, business overhead for the owners. Other uses we've done for GSI, DI is loan indemnification. And we also can consider accidental death coverage as well on a GSI basis. For enrollment, very similar to the CI product, for employer paid plans, it's a master application. So it's 1 application. We don't need individual applications from everyone. So a master application and a census enrollment for employer paid plans. For voluntary plans, we have a custom enrollment site that we have built specifically for that company and plan design. And in addition to a Lloyd's enrollment platform, we also work with domestic DI carriers, and we have a dual enrollment platform where we can enroll the individual DI product as well as the Lloyd's DI product on top of it as well on that same platform.
Yeah, it's pretty amazing the benefits that we can get up to with this, Lloyd's GSI product, and then just how easy it is to actually enroll the people that are eligible for it. So definitely have a streamlined process, and again, it doesn't have to be DI or CI. I think there's a argument for DI and critical illness, and we'll kind of talk about why that's the case. So, want to just kind of jump into a case study so that you can kind of see what we're talking about on both the DI side and also the critical illness side, and kind of how they fit together. And so, there's a private equity firm, 5 highly compensated executives, incomes ranging from 700,000 to 1.6 million. They have 20K of group LTD, and then they have individual DI of 15,000 stacked on top of it. So they have 35,000 of DI coverage. But if they're even the lowest, 700,000 does have a little bit of gap, and I'll kind of show you what that gap looks like. So we're able to write the excess on top of both the group and the individual DI. And we went in there and showed both the DI and also the critical illness. The DI specifically, we were able to get up to a 65% income replacement. And then we just went with a $250,000 employer paid critical illness plan as well. And as Lily mentioned, implementation was streamlined, online, very easy, very simple, was able to get them covered. So that 250,000 would pay a lump sum. And then the monthly DI benefit up to 50K would do 90-day elimination period, 60 month benefit period, but has that great own OC definition. And so if you look at the numbers on this, or let's talk about this first, why might you need both? Well, first of all, you client might not meet the elimination period. As I mentioned earlier, I've known a couple people that have had cancer, and they were still working part time. They'd go do chemo on Friday and be back to work on Monday, and so they might never meet the elimination period or meet the definition of the residual, depending on how much work they are missing, and so during that time, it would be beneficial. And then also, the client might not have 3 months of liquid assets. And as crazy as that sounds, right? Like, let's say somebody makes $100,000 a month. Do they have just 300,000 of liquid assets in the bank? I don't know, maybe, but they probably have it, moved into investments. Places where so it's just good to have that liquid assets available through the form of a critical illness policy. So, looking at it, names, ages, incomes have been changed, but we got Joe, Julie, John, Juanita, and Josh, and you can see the various ages and incomes that they are making, and really focus on this monthly income because obviously the DI is based on a monthly benefit, and so you can see here the 20,000 group long-term disability, the individual DI, so that gets them up to 35,000 based on their income. This is what they're eligible to get them up to that 65%. And you can see what their total monthly DI coverage would be at that point. And so if you don't do the IDU, you can see how much they're exposed. And obviously, Josh, the oldest with 1.6 million of income, if he doesn't purchase the IDU policy, he's only protecting 26% of his income. And we were able to get him obviously up to 65% with the IDU. And you can see what the monthly premium is. So for all that additional coverage with the IDU premium, only a little over 2,900 a month. So a lot of protection there on the IDI side. And I always like throwing in some graphs just to show the need. Obviously, the blue here is their income, their monthly income. The red is without IDU, and the green is with IDU. And so again, that highest income, there's a big gap there, exposure there if they become disabled, just because the group LTD and then also the individual DI just doesn't cover enough. And so that Lloyd's policy sitting on top of there really makes sense. And here's another way to look at it, from a proportion standpoint, but there is a huge gap there for these high income earners. So from a critical illness perspective, again, we did 250,000 lump sum benefit. I just threw in here what their 3 months of income is, right? So you can see here, and that's just because the elimination period on the DI policy had 390 days. So it doesn't have to line up exactly. We did 250 because it kind of was a nice place in the middle, and so for an additional approximately $1,100 a month, we were able to get some pretty good coverage here. And so I like the CI DI combo. Again, you don't have to do both. So you might have a group that they don't have incomes that really need the GSI. You could go in and still write the CI in those scenarios, or you might have a GSI policy with a different cover holder that doesn't have a CI. You could go in and write our CI as well. And so there's a lot of applications for this. Again, it doesn't have to be one or the other. I think there's a place there for both. But the key thing here is that to remember is that, number one is that survival is a good thing, right? I hope I survive a heart attack. I hope I beat cancer if I unfortunately are ever diagnosed with it. But survival does have a cost. And, one of the, issues that high net worth individuals face is liquidity. And so having that lump sum paid and able to use that money as they see fit, I just think is really beneficial. So if you have a group that you'd like to see a quote or you'd like to talk about this more, my contact information is up on the screen. If you want a GSI quote, for either the DI plan or the critical illness plan, you can email GSI quotes at iduinc.com. Lily, before we wrap it up here, do you have any final concluding thoughts?
Yeah, I would say the pricing that you showed in the previous screen, it was just a sample pricing based on five lives in the sample employer group that we did. But with
Yep.
more lives, we can definitely consider for additional discount.
Yeah, my recommendation to people is always just reach out and let's provide the census, the information on it, and we'll get them the best quote possible. So, yeah, my recommendation is reach out. I'd love to visit with you more about some opportunities, walk through the product, answer any additional questions that you might have. But I'm excited that this is available and look forward to working with all of you on a future case. So, thanks everyone.